Let's focus in on income inequality. Now, of course, the rich own a massive chunk of America's wealth, and older people are richer. I mean, they've had more time to accumulate assets, but there's evidence that the Millenials, aka Gen Y, are quite a bit poorer in terms of their share of national wealth than the boomers were at the same age. Let's get more on this stuff from Viktor Shvets, head of global desk strategy at Macquarie Capital. Thanks very much for coming on.
Thank you for having me.
So you've been focusing on the US, and you call to mind the Gilded Age when we had the industrial tycoons, the bankers building mansions, there was widespread poverty, there was extreme income inequality. You say we're not back to that stage yet, but there are big income gaps.
Yeah, there are, both on income and wealth. I think wealth is actually even more important than income inequality. If you think of the United States, 0.1% of the households, which is only about 130,000 people, today control 14% of national wealth. If you go 20 years ago, that number would have been closer to 8.5%. Perhaps more disturbingly, the middle, anybody between 10% and 50%, now owns only about 30% of wealth, whereas only 10 years ago, that number would have been closer to 40. And perhaps even worse, the bottom 50% of the households, and in American context, that's about 66, 67 million households, own pretty much nothing. Wow. They only own about 2% of national wealth.
So the land of opportunity, half the population has no assets?
Has no net assets. So in other words, in order to maintain certain lifestyle that they've got sort of accustomed to, they've gone deeply into debt. That's why for bottom 50%, around 60-70% debt to assets ratio, whereas for the top 0.1%, it's only 1 or 2%. So on a net basis, the bottom 50% own absolutely nothing, and 0.1% has been pulling away from the top 1 and the top 10.
I remember reading that traditionally Americans were unusual, that they had an optimistic outlook on life, whereas many Europeans, for example, were more pessimistic. Now, that's a sweeping generalization, but do you think that's why Americans are willing to, half the population with no assets, no net assets, why do they put up with that? Is it because they think, well, hard work, et cetera, will get me up the ladder?
Yeah, traditionally, U.S. had a very high social mobility index. So in other words, it was possible to get ahead in life, even though you started at a poor level. What started to happen over the last 20 or 30 years, that U.S. social mobility indexes have collapsed. Today, U.S. have a lower social mobility, not just compared to, say, Scandinavia, but also France, Germany, wow. UK, Canada, Australia. So the result is what we've been seeing is less mobility. And that is why you have increasing polarization in the U.S. society. In other words, as you correctly said, Americans are okay with people being wealthy, so long as everybody has an opportunity. And what's been happening, those opportunities in the U.S. have been diminishing.
I wanted to get onto this age thing now. Just the definitions vary, but the millennials are roughly 28 to 43. The boomers, I count myself as a tail end boomer, are 60 to 78. So you say these current millennials who are 28 to 43, roughly, definitions vary, have a far lower share of national wealth than boomers would have had at the same age.
Yes, indeed. They own less than half at a comparable age versus the boomers. And part of the reason, again, is the social mobility indexes. Today, if you're born in the top 20%, you only have 8% chance of out-earning your parents and your grandparents. But if you go on to 1940s or 50s, for example, that ratio would have been 50%. Even more slightly disturbingly, if you were born, let's say, in the bottom 20 percentile, you only have now about 40-45% chance of out-earning your parents as you go forward. So that's a problem. Now, there is an underlying reason, and that's what I call Fujiwara effect, which is a merger of technology and financial financialization over the last 20 or 30 years, which increasing inequality everywhere globally. But in the US is compounded by the taxation system that prioritize capital gains rather than income. It's also somewhat the dystopian healthcare and education system. So there are reasons why inequalities are rising faster in the United States compared to other countries.
Victor, we're tight for time, and this is obviously getting into the realm of political economy, but do you think America will ever see a robust socialist movement that has mass appeal?
No, America is not going to be. America continues to be a right-leaning nation, and that's going to continue to be the case. But just like in 1950s and 1960s, society insisted on more equal distribution. Right. And the way it was done is by much more proactive state sector in those decades. Now, I think we're going back to 1950s and 60s, and I think that's what society will increasingly demand, effectively a state guardrail.
That's